What up guys, Nakamoto Crypto here. Yes, so another giant company, which is the Celsius network, is in trouble as they are not only struggling to pay their investors, but also their price has been plummeting and they've been hit really hard. So if you hold the Celsius network Cell token, you're going to want to watch this one. Stay tuned, like and subscribe. Let's get to it. So Celsius network is facing a major revolt. Tensions are boiling over the company. It is a giant crypto lending platform, just like, BlockFi, and it was just like Terra pretty much. They offer high yields. These companies, major institutional lending platforms that are, your traditional banking lending platforms, they fear companies like Celsius because of the high yields that they offer. All of these companies have been falling down one by one. So not only that, the SEC is also coming after the Celsius network. So basically, some Celsius network customers, are saying that they were unfairly wiped out of the recent crypto crash, last week and the week before that. And the CEO of Celsius, Alex Mazinski, now is saying that this is the same bad guys that got Terra are now coming after Celsius network because there's a threat, and we're going to talk about that later on. So right now, Celsius was worth about $16 billion just a few days ago. They are down to $11 billion. Not only that, the firm lately was attacked by cryptocurrency regulators, i.e. the SEC and all these other corporations. And if you remember, just a few months ago, the state of Texas, the state of New Jersey, and Alabama all handed Celsius a cease and desist letter for, selling unregistered securities, which is products. So they told them literally, you cannot operate over here. Since then, Celsius have been on a downward spiral. Even their price have been plummeting. So they lost 60% of their value over the past month alone. And not only that, it is unusual for like a broker, right, to sell the client's holdings if the investor has used their securities as collateral for loans, and if the value of those holdings falls dramatically. So that is just the normal thing, how the banking systems and that work. But in Celsius Network's case, this is what happened. The platform itself started asking the people who were borrowing that had posted their Cell tokens as collaterals for additional loans to like, hey man, you got to bring more funds since you are the one who are borrowing to back up your collaterals. This was so that they can sell those holdings as the company was losing money because the market was going down. They just got hit by a 60% crash, so they were not making any money. So investors, then the borrowers, started to complain that although Celsius had encouraged them to use the Celsius token to keep it up with trades so the price can stay up at a certain level instead of dropping, trading became illiquid pretty much as the price of Celsius network just keep on falling down, so making their losses even worse. The company pretty much failed to support their cryptocurrency, the Celsius network token. So right now you can see them got hit, they down to 73 cents. This went as high as I think $7 last year. Yep, all-time high was $8, and that was in June of 2021. Celsius network bottomed at 2 cents back in 2020. So for those who bought Celsius, they made a ton load of money at the bull market of last year, but they just couldn't keep up with those all-time highs. The market traditionally it's down, so you can clearly see that they got hit pretty bad. Like 90% of its value is gone. They from all-time highs of $8 down to like 73 cents right now. So you can see why the company Celsius network is struggling. Now, Alex Mazinski, the owner of Celsius, has come out saying that, hey, this is not a coincidence. Somebody is playing us. So he's saying that they were targeted, just like Terra. So there's a big conspiracy theory going on out there that Terra and companies like BlockFi, if you remember BlockFi, and all these other corporations, crypto.com, these major crypto companies offering these major high yields on stable coins and all these credit cards and debit cards, they are disrupting the financial system. So the only way to bring them down, because they are literally destroying the banks. I mean, look, why leave your savings in a bank account when you can put it on Celsius network stablecoin or Terra right, and you get 20% on top of that per year? That's why a lot of people got burned last week with the Terra fiasco going down. So the conspiracy is that the same institutional investors who hit up Terra and literally brought it down by borrowing Bitcoin and just selling it against the UST, depegging the whole stable coin. Those institutions, they are either getting paid by the big banking system, the traditional banking system, to bring down these crypto lending platforms that are destroying their customers. So when banks start to lose customers, they're going to figure out who are their competition so they can just destroy their competition. So there's a theory right there. That is what is going on. That's what Alex Mazinski of Celsius, the CEO, is saying, this guy right here. And not only that, Celsius just pulled out, right, $500 million last week out of the Anchor protocol, which was linked to Terra Luna. So once Terra started going down, they just immediately pulled out $500 million. So that means Celsius Network must have had billions of dollars into Terra Luna, which means they just lost it. That is part of the reason why their holdings went from 16 billion down to like 11 billion. So they were quickly pulling their funds out of Terra while Terra was going down before this could turn into a recipe of disaster. So that's also part of the reason why the CEO of Celsius is literally stating that, hey man, these institutional investors are out to get us. Maybe they are paid by the banking system allegedly, because Celsius, companies like crypto.com, they are disrupting the financial system. I mean, people in crypto were literally using their debit cards as crypto.com, and they were doing their daily spendings on it because their cashback rewards were way better than your traditional credit cards and debit card rewards. So why use your bank if you can make more with crypto, right? The conspiracy, once again, is that all of these companies are going down, are being taken down and being targeted one by one. The SEC also, will at some point come after Celsius Network. But Celsius is smart, man. Mazinski, he's a billionaire, and he just submitted this to the SEC. It's a confidential submission of draft registration statement for their Bitcoin mining subsidiaries. So they are literally telling the SEC, hey, this is all of us, this is our books. We want to resume to continue do our business mining, Bitcoin mining, whatever it is. You guys need to hurry up and approve this so we can carry on doing what we do. Another company right here, BlockFi. If you remember BlockFi Crypto, they got hit up too. Apparently, SEC just charged BlockFi $100 million, which BlockFi agreed to pay a few months ago, and they given them 3 months, which will end at this month, 3 months, and this is to bring their businesses into compliance with the Investment Company Act of 1940. And this, they had 60 days, which will come to an end at this month. So the SEC is not playing, they are moving. I told you guys since last year, if you were watching my videos, that the SEC would be coming down with the hammer. The regulators are coming really, really hard on crypto and cryptocurrencies. So for those who are asking about DeFi, when are they going to come after DeFi? My take on this is that they're not going to hit up DeFi just yet. They have bigger fishes to catch. That is these lending companies. Look at BlockFi. They just got hit with $100 million fine. Celsius could also pay for a fine. And then the staking platforms, they might come after them too. Who knows? It might be Cardano or Solana. So they're going to come after the layer ones first, make their money there after the XRP lawsuit, and then they're going to work their way down to DeFi. Once they get to DeFi, crypto projects like, all of these lending crypto projects, these ROI platforms that we have been covering on this channel are going to get hit up. You best believe that, because there's no way you can carry on paying people these high yields and this gonna last forever. So and that is just the truth and the reality of the world. If all of these platforms was legit, Drip, Splash, Save, Elephant and all, if this was meant to be the new thing that will disrupt the financial system, like, there is no need for a bank. So they are literally creating a banking system into decentralized finance, but the SEC will definitely come and tell them, hey man, how decentralized are you? So if they sense a small, even if it's a small sense of centralized entity within your thing, that you are controlling stuff, you are hiding data, doing a lot of shakiness, then definitely they're going to bring down the hammer on you too. Unfortunately, That's what it is. Regulations are needed into cryptocurrency because people lose money, man, and no one cares. The little gullible investors are losing a lot of money out here, and no one cares. People just move on. They tell you to move on to the next platform. So if the SEC comes and regulates this thing, then we would have an idea of what's legit out here and what's a scam and what should be stayed away from, and it will weed away all of these scam products and scam companies that has been going around into the DeFi platforms. And also it will kill rug pulls, so you will likely to see less and less rug pulls and slow rugs or whatever you call those in the future once regulations are here. With that being said, like up the video, share it, subscribe. What are your thoughts on the Celsius network token? Do you hold Cel token? Did you make money with Celsius? Especially last year in 2021 when Celsius literally went from a few cents all the way up to $8. Let us know in the comment section below. Like up the video, share it, subscribe for some crypto content. I have been Mr. Nakamoto Crypto, and I'm out.